Good morning, guys. It is Thursday, October 10th, 2024. This bathrobe business, I'm a lot of coffee, but I still have the news. So, headline story: inflation, inflation, inflation. I'm just going to jump right into it. So, inflation came in hotter than expected. If you watch this channel, you know that's no surprise to me. I think the writing's been on the wall for a while, and then they cut interest rates into this market. So, that just seems crazy to me. But let's just jump into the numbers first. Consumer Price Index, this is the CPI, rose 0.2% in September. They were expecting a 0.1% rise. This is hotter than expected as an annual rate increase to 2.4%. Now, you might be saying, oh, that's not a big deal. It just rose slightly. The problem is the trend, right? We're supposed to be seeing a decrease in interest month to month. The argument for the rate cut, on top of multiple factors, including jobs, was the fact that inflation's going down anyway. So one way or another, it's going to keep progressing down. It's just a delayed reaction. So we've already done the work. It's just taking a while for it to marinate into the market. So one way or another, inflation is going to go down regardless. But it's not. The trend is reversing. Now, I also don't think that the interest rate cut has actually taken effect yet. I think that's yet to come. This is just the September inflation report in regards to food, energy, and housing. So I would expect that next month's report is actually going to see an upward trend as well. Now, here's where the rate happened. Obviously, shelter has the increase in rates happened. Obviously, shelter again is up, as I've constantly reported on all these reports. Whenever inflation was showing down, it was always offset by the fact that shelter costs were increasing, both for rent and mortgages. I shouldn't say mortgages, but cost of homes, because we've been seeing an increase in home prices regardless of what's been reported. Home prices have been increasing across the country, including here in Utah. Here in Utah, I think we had a 3% increase annually. Now, in this report, not only did shelter gain 0.2%, but food also jumped 0.4%, and also an increase in used cars and new car vehicles. Now the cars is a little concerning because we've been seeing a downward trend in that. This is the first time it's reversed. And then medical care services were up 0.7%, and apparel surged 1.1%, something that I don't think anybody saw coming. Now, the only thing that offset all of this was energy cost. So as long as energy stays low, we're fine. But every other sector seems to be seeing increases. And that is very, very concerning because, again, they cut into this market. Now, here's the crazy thing for me. Despite the fact that it has increased, Axios posted this story, and so it's to me this is insane. This is irresponsible. So Axios is saying, and actually Bloomberg said the same thing. Inflation falls to 2.4%, lowest in 3 years. No, inflation did not fall to 2.4%. Inflation rose to 2.4% because the estimate was supposed to be 2.3. They're trying to hide the lead. And if you read this headline, you think, oh, there's nothing wrong. Inflation's not going up. Yes, it is. And Bloomberg did the same thing. They're still pushing for another rate cut. Now, in addition to what we talked about with rate cuts, I want to talk about this story. So this is pretty much what I was expecting because I've reported on this channel multiple times that the bond yield is going up, that the 10-year treasury is going up. And here's a story from Business Insider. Rate cuts were supposed to push mortgage rates lower. The opposite has happened. This is from article from 2 days ago. So the average cost of a mortgage went up from 6.15% to 6.62% because of the 10-year treasury. And now, because of this information, more than likely the treasury yield is going to rise again because I don't see how you can cut into this market. So you're probably going to see this touching near 7% again on a 30-year mortgage, despite the fact that we had a half a interest rate cut just a month ago. So that's very, very concerning. I don't think this is a small thing to scoff at just because inflation went up slightly at from 2.3 to 2.4%, that it doesn't mean much. It means a lot. This also isn't taking into consideration the port strike that happened just a couple weeks ago. Now, that was only a 3 to 4 day blip. But since we're seeing inflation in multiple sectors, from retail to housing to you name it, food, I think that is going to play an effect. When you're talking about a shutdown that usually costs the economy about $5 billion a day, there's going to be reflection in those numbers. At the very least, it's going to keep them from falling. What to do with this information? The only thing I would recommend is today I would buy a stock because I don't know what the market's going to be like when it opens. It still has another 30 minutes till open. I think if you've been eyeing a stock that is a little bit resistant to inflation, i.e., tech, anything with AI, that's what I'm going to be aiming towards. Or maybe you want to target something that is a beneficiary of inflation, like retail, cars, etc. Just avoid Stellantis. Today might be the day because there's going to be a pullback, obviously, because the market is going to react to this data. But then in a couple of days, it's going to rise again. So if there's any pullback on any stock you've been watching, now would be the time to buy. Okay. Next story. Next two stories are really just quick ones, and that's pretty much the whole video for today. It's going to be about airlines. So I'm going to share this from Airbus first. So Airbus is monthly deliveries fall, piling pressure on annual target as production woes persist. Now, this story is much like what they did with inflation, is actually kind of burying the lead. So this story is actually interesting because there's two factors that are at play here. If you read through the article, you see that their deliveries are falling not because people aren't ordering, quite the opposite. They can't keep up with demand. And in addition, they're facing powerful inflationary pressure because they still have supply chain issues. So it's not really a surprise that we're seeing inflation when major manufacturers like Airbus can't seem to meet their order deadlines because they're having supply chain issues to this day. Now, they're still getting record ordering. So for Airbus, net orders came in at a record 2,094 in 2023, swelling its order books to 8,598. For September, it ticked up another 235 orders, taking its annual total to 648. So they're seeing a rise in demand, and that's actually reflected in addition to this story from Delta. Now, this talks about how Delta sales guidance disappoints. But again, if you actually read the article, it talks about the only reason they might see a lower fourth quarter is because of the election. They say normally around election time, there is a blip where flights drop down. But their holiday orders, their holiday pre-sales for flights are already at a surplus. So airlines are doing well. Manufacturers are doing well. There are issues with supply chains and inflation, but overall, this is strong. I usually look at things like flights as a luxury spend because it doesn't mean people don't travel for business, but I feel like a lot of times people will travel air mostly for vacations, trips, seeing family, etc. And so as long as this is doing good, the economy is doing good. So since we're seeing strength in airlines, since we're seeing strength in airplane manufacturing, I think overall the economy is very strong. Ergo, why we're seeing such powerful inflation is because wages are growing, jobs are growing, people are spending more money. It's a hot market. And so I think this is good for the economy overall, but I think we need a Fed that's actually properly regulating this economy and not cutting into a surging economy. So that's pretty much it. Those are the stories of the day. I will see you guys back here tomorrow, and I hope you have a productive Thursday.